Yeah. Let's spray it all over me. All right, so we actually on.
Yep.
Should I be facing them now?
Pretty much,
Yeah,
yeah.
I say,
Why not?
I'm out to just bring them closer to you.
Or just move that podium over here.
Just have a
Can we?
conversation.
No, we'll just bring it over closer to them. Actually, just bring it up and talk to them.
Let me move it.
I'll bring it. I can bring this over.
Oh.
You know, you leave where
You
it
don't
is.
even need to move, right? Just stand. Look,
Well, they can see me a little
now you're
clearer.
gonna be like a big face. Big face.
Oh, we can see you.
Hey y'all, how y'all doing? Y'all
Hey.
can hear me.
Hey, yeah, we can hear you
guys
well.
got to get a master class because there's only two of you guys.
I appreciate the love. Appreciate the love.
Yeah. So again, it was good to see you guys. Y'all had a good day.
Yes, sir.
Yes.
Right. All right. So look, we're gonna go ahead and like we always do, we're gonna review with the 4 questions. I'm gonna see if you guys are paying attention. Do you guys know what the 4 questions are?
Why am I doing this?
There you go.
Okay, there you go. All right.
What's my motivation?
Okay, that's good.
Motivation. Did I see God's guidance or something like that?
Say what?
What's the 4th one?
No, say
Yeah,
it.
you're right. Say it again. Say it again,
I think
Marcia. You
it's
were right.
something like, did I see God's guidance or something like that?
That is true. That is true. That is one. And the 4th one, what is it?
What is my end goal?
There you go. There you go. So again, you know, these are things in which you got to keep in mind along the entire journey. The reason is because you're gonna have to be able to pivot, you know, with having business. And nothing, I always say nothing ever goes the way you plan. Nothing ever goes the way you plan. Sometimes it goes better. You know what I mean? But again, you got to be willing to pivot and you got to be willing to move as does the business. And then a lot of times, these are going to be some of the main questions. These 4 questions are going to be some of the main questions that you actually ask. I mean, even to the point where, you know, did I get in this business on me or did God tell me to do this business? You know, because again, a lot of times, you know, God ain't gonna, you know, God will tell you what to do, but he'll never make you do it.
Yes.
You know what I mean? If that was the case, then he wouldn't be a God, he'd be a dictator. So
I have a question regarding that. When you say God has called you to do it, does that mean it's always going to be easy?
No.
Does that mean it's going to happen? I just remember some of your testimonies and it just seemed like things lined up so well. I wasn't sure what the length of time was because sometimes it just seems like there's such a length of time before things fall in place.
Absolutely not. I'm glad you asked that question so I could dispel that theory and that you know what I mean? Absolutely
right.
not. You know, and again, like I said, sometimes it's been several times I say, God, do you really want me to do this? You know what I mean? But the funny thing about it is when you get to that end goal, you're going to realize exactly why you had to go through it. A lot of times in business, not when you go through a lot of the heartache and the pain, you get through it, but it's not for you. It's for the next people that you're about to talk to. You get what I mean? So a lot of times it's not for you, but like I said, can someone on the street come out and tell you something, even though it's right? You know, exactly. But when you got someone who's actually, see again, it's not real unless you can feel it, taste it, smell it, touch it.
Okay.
So it's nothing I'm gonna tell you that I haven't experienced. If that's the case, then I'd be like, that's hearsay. I heard this is how this feels. I heard this is how it tastes, you know. But a lot of times your life experiences, and especially whether it be life or business, come from where you come from. That way you can connect with those individuals. I can tell you, you know, by doing this right here, if you do this right here, you're going to lose anywhere between $30,000 to $50,000. I can tell you that. Guess why? Because I've lost between $30,000 and $50,000.
Experience, okay.
Exactly. But here's the thing, though. God put me in a position. There's that word again. Put me in a position where theoretically I was able to bounce back. To now, by I was able to survive that, I could tell you exactly if you were to do certain things, this is what's going to happen.
Okay.
No, so no, that's going to be the spell. But for the sake of time, we're going to jump right on in. And again, like I said, I like to do these reviews for the mere fact that by doing the reviews, what it does, it allows us to, as we're going through, because we've been doing this for a couple of weeks now, And it
Mhm.
allows us to, if we've been going forward, and I'm on Marcia, you've been saying that you've been,
Yes,
like I said, I ain't gonna call you out, but I just did.
I'm doing it. I just came from vacation. I'm doing it. I promise.
All right, like I said, now, here's the thing.
Yeah, I'm doing it.
These are the principles. Here's the thing. A lot of times too, in business, what you want to do is you want to share a lot of the things, your dreams and goals with the right people, because what happens is they hold you accountable to what you said that you need to be doing. You follow what I'm
Yeah,
Yes, sir.
yeah,
saying? You
yeah.
want to make sure again, but not the wrong folks, because everybody who pray for you ain't praying. Are they praying for you? Or are they praying for you? Because you got two
Right.
types of praying. You got the PRAY or you got the PREY. You got to be wary of both. You know what I mean? Because everybody who praying for you ain't praying for you.
Right, right.
So you got to have discernment on that. But then that's also too where that accountability partner comes in.
Yes.
Someone that's going to hold you steadfast, because you said if God told you to do it,
Mm-hmm.
Moses didn't do it by himself, did he? You know what I mean? He had Aaron to hold him arms up, but guess what? He knew that was a task that he had to get done. So I would say look for your Aaron. I didn't say that
Okay.
before, but every real good business, they had that CEO, that owner, they got someone they could actually fall back on, when time of despair. Because to answer your question, there's gonna be some times of despair,
Mhm.
But again, if God has said that this is what he has for you, he's gonna also give you the provision in the way of moving forward. You just got to be willing to do it.
Yes.
All right, so as we go through the review, we're gonna just go right through this, especially you guys, because you already own it. The first thing, also, let me ask you this: before you do anything, before you start a business, before you do anything, a name, a logo, what's the first thing you guys gotta have?
Before you do anything, what am I
Before you
supposed
do anything, before you start your business, a business plan, what's the first thing that you should have? What's the first thing that you should identify?
Your
Um,
audience,
and
your
your-
audience,
No, it's not the audience.
not the
or what
audience.
the vision or the product?
Okay, so let me help you guys out. Remember what I
Okay.
said? The very first thing you need to have before you do anything is the USP, the unique.
Oh, unique selling. Yeah,
Yes, yes, yes.
yeah.
You got to have that. That's your differentiator. That's your McDonald's versus Burger King. That's
Mm-hmm.
your Popeyes versus KFC. That's
Yes.
Nike versus Adidas. That's your AMZ versus Regal. They all do the same thing, but it's something uniquely different between them, right?
Yes.
Correct.
You got to make sure
Correct.
your business and what you're actually doing, you got that unique selling proposition. You got that uniqueness between your business versus anything else. All right. Write that down, guys. That should be
Yep.
So right now, again, once we have the unique selling proposition, and we already went through our 4 questions as far as why are we doing this, God giving us the motivation. Once we answer those 4 questions, then we can go right into it. We go into the developing the business idea. Notice I said the business idea. You got to understand what the business idea is first. Visualize what that is. See, okay, this is the idea I have. A lot of times people get caught up in having an idea and then get afraid. Like, well, shoot, ain't nobody else ever did this before. I've been told that many times, man, ain't no one ever did that before. I said, yeah, because God was waiting on me. You know what I mean?
Right.
But ever did Uber before Uber, didn't it?
That's true.
Did Microsoft before Microsoft, didn't it? And nobody did Apple before Apple, did it? You know what I mean? So again, why not you?
Right.
Why not you?
Right.
A lot of times he's waiting on you.
Right.
You guys got to understand, faith and fear can't coexist. So just know that this is what you're gonna do. You got to be all in, right? All right. So that's the business idea. Number 2, you want to develop the business plan. Business plan. Then from there, number 3, what we want to do is we want to create or choose the business structure. And if you guys remember, the business structure was more of like, okay, are we going to be sole proprietor? Are we going to be LLC? Are we going to do incorporation? And understand, the benefits or even the setbacks of both, because that has all to do how that's basically how is Uncle Sam going to get you? You know what I mean?
Yeah.
Right.
Well, basically that, and and also how basically your business is separate from you. You know,
Right.
that's why I say sole proprietor. I don't really think that that's something a lot of people doing these days. But again, it's all about, you know, I would never tell you what you should do. I would just tell you, you know, the benefits of, you know, what it is. All right. So then once you do that, you want to register your business. You know, that's when you actually go into the or you go online, your Secretary of State. You know, before you register, you got to actually register the name, you know, reserve the name, you know, so that they could actually see, okay, let me do my research to see if anyone has that name. And then, of course, then once they get back and say you got 30 days for the name, then you go ahead and register your business. Now you want to, after that, now you want to set up your finances, because once you get that seal from, you know, state of Georgia, where that's where we're at right now, you want to go ahead and set up your finance, you know, your business finances,
Right.
you know. And then again, after that, what we said is now we want to build a team. You know, if you're selling a product, if you got things that you're doing on the weekend that you know you can't do by yourself, you know, you want to build your team. Now, here's the thing: my personal two people that I try to stay away from, y'all remember? Don't put on your
Yeah, friends and
Family and
family.
friends.
man, boy, family go family and friends go friends. You know what I mean? And we in the church, because I would say something else.
Thank the Lord for the church.
There you go. There you go. And I promise you, you guys, like I said, it ain't real unless you can feel it, taste it, smell it, touch it. Been there, done that, won't do it again. You know?
Right.
And then right there, guys, after that, now you guys are ready to launch the business, you know. And if you think about, like, if you look at these principles, you guys got a chance to take a deeper dive throughout this series, because we talked about, you know, the finances when Kaba and
Right.
And then, of course, you know, when we talk about the launching and the business and the marketing, that's when James was actually able to do it, you know, from that standpoint. And this would be a good segue for tonight, because again, you know, we'll be talking about some of the things that a lot of people don't really think about until it's too late. You know what I mean? And that's
Yeah.
so we'll dive into that as well. Moving on, you know, when we were kind of talking about, you know, and now that you have the business, what we were saying is we wanted to create that growth mindset. You know what I mean? And we also, you know, so basically that's the growth mindset. Theoretically visualizing where you're at, and then, you know, putting yourself mentally there. Then from there, what we wanted to do is we want to talk about scaling the business. You know, this is, remember I told you, you know, sometimes you can grow too fast.
Right.
Not going fast enough, you know, especially if you buy all this product because you've seen somebody else sell it, and then all of a sudden, I mean, COVID hit, and now you got all this product. You got all these T-shirts you're trying to sell, and guess what? You ain't got nowhere to put them. You know, that's scaling too fast, you know, from that standpoint. So again, you want to make sure that you can actually manage that. Then, okay, now, you know, we talked about promoting the business. You know, we got more in depth in that last week with James, when he was talking about the different ways of, you know, marketing your business. Promoting is the same thing as that, you know. And then from there, you know, we were like, okay, now that you've gotten those things, it's all about maintaining the business. And maintaining the business has more to do with than just financials. It's more of like compliance, because again, it's best to have it and not need it than to need it and not have it. So you want to make sure you have that. You want to make sure that you have legal representation for mitigating any legal risk, you know, operational, you know, risk, you know, the human risk. Having the wrong staff, that right there can kill you faster than anything, you know, because again, keep in mind, the staff don't have the same mindset and the same loyalty to your business as you do, you know.
Correct.
You just want to make sure that when you're maintaining the business, these are things that you want to, you know, have an overview for, you know. And then, of course, like I said, what we talked about, you know, the financial piece, that kind of spoke for itself. You know, that was more getting in depth about where the finances are, how to retain them, you know, the importance of the finances, things of that nature. And then, of course, you know, last week, you know, these are all overview, guys, because again, we're going to jump right where we are right now. You know, we talked in like basically the marketing practices, knowing your target audience. So that's very important. That's very important. You know, and then by knowing your target audience, that will help you, you know, identify that ideal customer that you're trying to go after, you know. And then I would say the second thing you want to do, as far as according to James, you know, with the marketing, is you want to create yourself a budget, you know, because then, like you said, there is a cost to true marketing, you know. So If you got cheap a budget, you're gonna have cheap results. You know what I mean? So that's kind of like what he said in a nutshell. You know, whatever you pour out is what you're gonna get in. You know, then of course, you know, you want to be able to manage your budget. You know, from that aspect.
Right.
You guys got that right? Okay.
Yeah.
Yeah.
One of the
I
things.
do have a,
Go ahead.
I'm sorry, I do have a question for, so I didn't make a good note. That's why I'm asking. He talked about being the first to market your UPS. How do you market your UPS? I need, can you explain that? What exactly what that may have meant?
Well, I could say this. I could kind of uncode what you're saying.
Okay.
First to market your UPS, keep in mind, it's your unique selling proposition.
Okay.
Your idea.
Right.
So really, it's not like somebody's going to be first to, let me say this. They were doing cabs forever before Uber, right?
Correct.
He actually, no one was thinking about Uber before Uber, correct?
Right.
So
Right.
when he became first to market, that was his idea. He was the first to market his idea.
Okay.
You get what I mean? So
I understand now. Okay.
it's your idea. And a lot of times, a lot of ideas form off of what other companies are not doing. You know what I mean? I mean, at this point in 2023, it's really nothing under the sun that it really ain't really happened. You know what I mean?
Yeah.
So it's all about, you know, what it is that you say, man, ooh, how many times you go in and say, man, that was nice, but if only they could do this right here.
Exactly. Yeah, I got you. Yeah.
That could be a unique selling proposition.
Oh, okay. Okay.
Actually, you know, you see what they're doing.
Got you.
And now I actually fill in these gaps right here.
Okay. You can apply to a different market. You can
There
see
you
what's
go.
missing for a certain market. Okay, great.
Yeah,
That's
so
what
you differentiate yourself. So that makes sense?
that does. Yes. Thank you.
No problem. But like I said, again, these are just overviews. And tonight, what we're going to do, you know, we're going to have Jesse come up right now just to kind of talk to you guys about something that really doesn't happen a lot, you know, talking about the insurance. Insurance is just in case, you know what I mean? But how many times again, that's one of those best I have it and
Wow.
need to not have it. So, you know,
Right.
I think he's going to not only talk to you about the the primary way of using it, but all the other financial gains that you could probably get with it as well. So I think that's up in the transition. I'm gonna go ahead and turn it over to Jesse right now.
All right. Thank you, sir. Thank you.
No problem.
Thank you.
Sir.
All right.
What's up, my two attendees on Zoom?
I know, right?
So we
Yeah, this
was gonna have a conversation today about insurance, how to use it mainly from a business perspective.
right.
Have some questions about how to use it personally as well. We can definitely do that. But I just kind of wanted to get into some ways of actually how to use life insurance for your business. So forgive me 1 second. I'm gonna actually put this PowerPoint on the screen so you guys can see it.
Oh, okay, great. Yeah, this piqued my interest when I got the email and it said life insurance is used to recruit and retain employees. I was like, what?
Yeah, it's a benefit.
Yeah.
Employees don't love anything, they love benefits.
That's true. True that.
I can see. If you offer their loyalty a little bit.
Right.
Let's see here.
But I never thought about it. Never thought about it.
Wait for it to come up.
Oh, and thank Tamika for sending the brochure.
Oh, you heard him, Tamika? Oh, that was thanking Tamika for sending the brochure. Okay, that's top one. Okay, can you guys see my screen?
Yes, sir. I can.
Okay, great.
Slideshow. So Jesse, let me ask you a quick question, because I know here you say life insurance in business. Are you just to make so what you're saying, you can, instead of getting business insurance, you can get life insurance and then it translates and use it for business purposes?
Yeah, you basically what I'm gonna talk to you about is so basically simply life insurance, but there's one way to use it for yourself personally, but then there's also ways to use it if you have a business.
Okay,
Oh.
okay.
Mhm.
Okay.
So mainly because it was a smaller group today, I was gonna talk about mainly just how to use it, for yourself personally, but just to stick with the theme and also just with everything that we got going on with the class, I'm gonna go ahead and talk about how to use it for your business as well.
Okay.
Okay.
Mhm.
All right.
Mhm.
So reasons for insurance for your business. The first thing is key man policy. I'm gonna talk about that, key person protection. The second thing that I'm gonna talk about is like you were saying, Tamika has sent out earlier, is employee benefits and retention. I'm gonna also talk to you about the tax benefits, and then lastly, I'm gonna talk to you about basically using life insurance to help continue the legacy that you built when you actually create that business. Okay. So the first thing that I mentioned, like I said, was key man policy. So in business, we have a key man policy is nothing but a life insurance policy on a key executive that you will have in the company. So for instance, I'll kind of relate everything to New Mercies. So the church would my father, he's the pastor of this church. If something was to happen to him, let's just say unexpectedly, and it had not necessarily been planned for, it could put the church maybe somewhat in a financial position that it would not want to find itself in. So a lot of times what companies do is they take out policies on their key executives. It could be their CFO, it could be their person that's over marketing. Anybody who is a main contributor to the success of the business, what companies will do is take out a policy on that employee. So you can even see kind of in this illustration where, can y'all see that up there too? Yeah. Okay.
Yeah,
so
I can see. Okay.
I'm gonna start right here. So the business purchases a life insurance policy on the key employee. There's kind of two ways to do it, and I'll talk a little bit about both. But mainly the first way to do it is the company actually purchases the insurance on the key employee, meaning that they will be the owner. And as the owner of the policy, you control the death benefit, and you also control the cash that will accumulate inside the policy. Okay, so the key man policy, the business pays into the insurance company. As the owner pays the policy, the business may use the available cash values for accumulation. And then, like I said, if something was to happen unexpectedly to that key employee, the death benefit would pay out to the the insurance will pay the death benefit to the company. Okay, that way that there's any losses mitigated. Like I said, now you can use that money to, train now a new employee in the church's sense. We may, let's just use it as a church sense. We may be able to have, what's it called? Substitute pastors. I'll just use that word, substitute pastors, to come in and kind of preach on Sundays to help keep the church going, maybe until the church actually finds a replacement. So you can use those funds any way that the business sees fit to basically benefit the business. Okay. So that's pretty much the key man policy. It's just basically, it's really simple, taking out a policy on a key employee. Okay. And also those benefits, just a little bit more, is benefit one, life insurance is an asset of the business. So on your balance sheet, because life insurance, like I mentioned earlier, has a cash value component to it. So, if you take out a policy, you've been paying into it for years, it's going to accrue cash inside of it, just like a 401k would, like a Roth IRA would. It's going to accrue much higher than it would just you putting it in a bank. So on your balance sheet, that is going to be an asset for your business. Okay. You can also use this as a loan for your business, and I'll get into how we can actually use those loans and cash a little bit later in the presentation. But you can also, like I said, use this life insurance policy for cash or loans for business purposes. Also, banks will use the cash value and death benefit proceeds for supporting collateral. So if you want to use this policy as collateral for a bank loan to purchase an asset for your business, sometimes banks will actually recognize your life insurance policy as a legitimate piece of collateral. Okay. And then lastly, what I would like to talk about on this one is also just debt protection. Like I said, because it is collateral, it's something that the bank will use. A lot of people use, or banks recognize your life insurance policy as a form of debt protection. Okay. Y'all feel free to stop me if you have any questions at all.
Yeah, I have a quick question before you go on, just to be for clarity. When you're saying you're doing the key man policy for your business, the beneficiary, does it go to your business? Can it go to a family member? Can it go?
So it all depends on how you actually design the policy. So if you want to list the business as, and 9 times out of 10, if a business is owning the business policy, the beneficiary of that policy will be the business. You can list anyone as a beneficiary. You can list that employee's family as the beneficiary. If that employee had a trust, you can name that trust as the beneficiary. It all depends on who the owner of the policy wants to name as the beneficiary of the policy.
Okay, I was thinking mostly about a solopreneur, when you're first starting out, when you have something. That's why I was asking. Thank you. You can make anybody the beneficiary. As long as if you're the owner, you can make anybody the beneficiary. Okay. Also, and this is what we were just what we were talking about when it comes to executive bonus plans and using life insurance policies to recruit good talent as well as retain good talent. A lot of small businesses sometimes lose employees to whether it be bigger businesses or other businesses because they just don't have the benefits to offer that another business would. So life insurance is a benefit that can be offered to your employees because, one, as we just said, of course, you're providing them life insurance. That's one benefit. But 2, you can use these life insurance policies to offer them executive bonus plans. So basically what you would do is you would enter into an agreement with a key employee. Let's just say it's my CFO. And what I would do to them is say, hey, if you stay with me 10 years, I will give you a $100,000 bonus. And the way you fund that is you take out a life insurance policy. Just like I said, all of this is simply a life insurance policy. You take out a life insurance policy on that employee, and you max fund it as much as you possibly can to help provide bonuses or pensions if a employee stays for a certain amount of time. So you may say, hey, let's just say, you have your business and you take out a policy on an employee and you use it to put about maybe, let's just say $10,000 or $20,000 inside of that policy. Because the business is the owner of the policy, they control the cash inside the policy. Even though, let's just say I have ABC company. James is my marketing director. James is crucial to the business. I would love to keep James as long as I can. So I go to James and I say, hey, I want to take out a policy on you. And if you stay with me for 10 years, I will give you a $100,000 bonus. If you stay with me for 20 years, I will pay you a pension in retirement that will be funded by the life insurance company. So when you make payments to a life insurance policy, like I was saying, it accrues cash. There's 2 types of policies that are used to support this concept. You have one, a whole life policy, and then you also have a universal policy. There are 3 different types of universal policies, but like I said, I won't necessarily get into all that right now, but the main universal policies that you would use for this concept is maybe the main one that you'll use is an index universal life insurance policy. They're a lot less risky, and the growth on them is pretty optimal. You're probably looking at getting around maybe 8 to 10% returns on your money every year. So you can literally treat your life insurance policy or your executive life insurance policy as a separate bank account for the business. Wow.
So,
The-
then Jesse,
Go ahead.
so let's say you insure this employee. What happens if the business fails? What happens to that policy?
So there's a few things that can happen as the owner. So if the business is the owner of the policy, one, I mean, they can just, if there's cash in it, they can just cash out the policy, pretty much close it down. But two, if the business fails, you may just you can either still keep the policy alive if you still have the funds to do so, or two, you would pretty much just let the policy lapse.
Okay.
You would pretty much let the policy lapse. So also, if let's just also use another concept of that, what if you have a policy and the executive leaves before the agreed upon, let's just say they don't meet either the performance goals that you set within the agreement, or they leave before the time is made. One thing that you can do, or what a lot of people like to do, you can actually transfer that policy to another individual or executive that comes in. You would keep the cash, but the cash will stay inside the policy, but the new executive will have to undergo the same kind of underwriting that the first employee had to do, but you would basically be able to transfer that policy to the new executive.
Okay.
Okay. And like I said, so you can use these and what we call them in basically the insurance world we call them golden handcuffs. So the longer that the more that I can offer you, the more likely you're not going anywhere. So I'm trying to handcuff you to my business for as long as possible, because I see that you are an asset to the company. Okay.
So then let me ask you a quick question.
Okay.
I know you say if you would stay 10 years, I'll give you a bonus. But can this be a scenario where you can use this policy for annual bonuses?
You can. Yeah, you can use it for annual bonuses. You can, let me say, so as long as there's cash inside this policy, you can use that cash however you see fit.
Okay.
You don't just have to use it for bonuses. You can use it. Let's just say I take out like I said, I took out a policy on James. 7 years in, the policy has, let's just say, $100,000 inside of it. I can use that money inside because I'm the owner, because the business is the owner of that policy. Let's just say, I have a trucking business. If I want to use $70,000 inside of that policy that I have on James to go buy a truck, because we need more assets or we need more trucks on our lot, then I can use that money what I would do is I would not withdraw it. I would take a loan. Why would I take a loan? I would take a loan because loans are not counted as income. Therefore, it's not reported it's not reported as taxable income. I won't have to.
Wow.
And so what I would do is I would take that loan, I would go buy a truck, and then that truck will get out, that truck would make money, and I would just use the profits that I'm making to replenish that life insurance policy, and then do it all over again when I want to buy a new truck, when I want to use it for bonuses, when I want to use it for whatever I want to use it for.
Question for you.
Mm-hmm.
Something happens, and you say, James, what if something happened to Jim
Okay.
and he perishes? What happens now? Is the company held liable for that money?
So hold on, say that one more time.
So you took a loan out on
So
Jim.
I have a policy out on Jim.
You went to the same trucking company. You
Okay.
had a truck. Unfortunately, Jim died.
Okay.
And so
If Jim dies, I think what you're saying. The death benefit will be paid out.
Mhm.
But let's just say you're right. I took out a policy on Jim.
Mhm.
Let's just say it's a $500,000 policy.
Mhm.
I had $50,000 inside the policy that I wanted to use. I took $50,000 out of it.
Mhm.
Basically, and before I could pay, and Jim dies before I can pay the insurance company back.
Mhm.
What the insurance company is going to do is take that $50,000 from the death benefit, and now they're going to pay the company $450,000
Gotcha.
as opposed to the half of it.
Gotcha.
Okay.
Yeah.
Okay, so then
take
let me make sure I get this.
Sorry, go ahead.
So then the employee who has the policy then can't name his family members as beneficiaries then.
the owner of the policy will name the beneficiary. So
Okay, which is the company.
yeah, so another way that it could work is in, okay, so let's just say instead of the company owning the policy, the
Mhm.
company allows the employee to own the policy, and the
Okay.
company will just be a contributor to the policy. That's
Oh,
another way to do it. And then that way, let's just say the employee decides to walk away. Now the employer or the business no longer has to contribute to that company, but
mhm.
but the employee now is able to take that life insurance with them. They can name whoever they want to as the beneficiaries because they
Okay.
are the owners of that policy. Whoever owns the policy pretty much controls the, not pretty much, whoever owns the policy controls the policy.
Okay, okay, gotcha. Yeah, I understand.
So it just depends on the agreement that is struck between the business and the employee.
Okay, okay, yeah.
So that's the executive bonus plan. And so this was just kind of like a illustration kind of. So let's just say, you know, somebody hired somebody over 31 years old. We said, hey, if you stay with us for 10, you know, for 15 years, right? So we go down a year, let's just go to year 45. Let's just say that would be 15 years. So there's $99,000 inside of this account. So let's just say, hey, if you stay with me 10 years, I'll give you a $50,000 bonus. I would take that $50,000 from this policy and then pay them out that, you know, pretty much their bonus from this policy. And then I say, hey, if you stay with me until you're, you know, you're 63, so now this policy has accrued over $300,000 in cash. I will say, hey, if you stay with me until you're 63 or retire at 63, I'll pay you a pension every year, about, let's just say $30,000. And now you can use this policy to pay them a pension of $30,000, $40,000 every year.
Okay,
Okay.
yes, understand.
Right. So next I'm gonna get into a few of the tax benefits. So one, tax deferred growth. So the money that grows inside of an insurance policy is tax deferred. Basically, I'll just read the definition. So the cash value of certain types of life insurance policies, such as whole life or universal life, grows on a tax deferred basis. This means that the earning within the policy accumulates without incurring immediate taxes. As a result, you can enjoy compound growth on the policy's cash value. So while this policy is growing, like I said, it will not incur any taxes. And even on the back end, we're not even going to make a withdrawal. We're going to take loans. So therefore, there is no taxable income to even report.
Okay, okay.
So that's tax deferred growth. Next, you know, of course, you get a tax-free death benefit. If something was to happen, you know, to one of my employees, they pass away, that check that is coming to the beneficiary, you know, if it's me as the business, or like I said, if the employee owned the policy and they named their trust as the beneficiary, that is a tax-free check that will be coming to that estate or the business.
Oh, okay, okay.
Okay.
Yes.
Business, so also, okay, business expense deductions. Under certain circumstances, the premiums paid for life insurance policies by a business can be tax deductible as a business expense. To qualify for this deduction, the policy must meet specific criteria such as, such as being for the benefit of the business or key employees. However, it's important to, you know, okay, yeah, that just talks about it. However, it's important to consult that. So basically, when you can pretty much write off the premiums, as well as once we start making bonus contributions to the employee, we can write all that off as a business. It's tax deductible.
Okay.
Whoa.
Okay.
It doesn't matter what size of business. So me and my wife have a business.
You can now, like this says, work with a tax professional,
Yeah.
but no matter how size and usually, I mean, it's businesses that are probably classified or taxed as S corps. But definitely get with a tax professional. But no matter how big the business usually is, you'll be able to enjoy tax deductions.
Gotcha.
Yeah.
Okay. And then we talked about this earlier. This is just non-taxable policy loans. So because, and I'll just read it, policyholders have the ability to take out loans against the cash value of their policy. These policy loans are generally not considered taxable income as long as the policy remains in force. The borrowed funds can be used for various business purposes, such as capital investments, cash flow management, without triggering immediate tax liabilities. Okay. So the loans that you take, like I said, because loans are not income, you do not have to, report it to the government. Also, even for personal use, you do not. It's funny because I was actually doing taxes this year with I was learning how to do taxes. And I was like, man, I just don't know how do you just not report it? They just say, hey, I'm not going to tell the government about this money. But what I noticed is when I literally look at a tax form, you see a box for a 401k, you see a box to check for your Roth IRAs and things like that. You do not see a box to check for any type of life insurance policy.
Wow.
So that does not have to be reported to the government. Even like I said, not even taking the loan as it just continues to accrue, that money does not have to be reported to the government. Also, I'll just even talk about this for a tax benefit. So again, working with a CPA and learning that the first $250,000 of a business does not have to be reported to the government. Anything over $250,000 for that small business has to be reported to the government. So what we learned a lot of people do is that, so let's just say my business makes $500,000 that year. Right. What people will do is take that extra $250,000, stuff it inside of a policy, and now they do not have to report that money to the government.
Wow.
Ooh. Boy,
as you say that though, sidebar, this is a sidebar. So let's say you start a small LLC, right?
We cut that out.
And this is a sidebar, just so I understand. And then you're not making a lot of money. You still have to file the taxes, right?
But yeah, so that's just a small side note, a small little nugget to carry on.
Oh my, that's a huge nugget.
Yeah, that's why
that's a Fort Knox nugget.
We ain't gonna call our favorite person or some of these other people, but a lot of people like to complain they ain't paying no taxes. Well, learn how not to pay taxes like they do.
Right.
Yeah.
Knowledge is powerful.
Okay. All right, and then the last thing I'm gonna talk about is basically just using life insurance to continue your legacy. So you've built, you've worked and slaved over this business for 20, 30, 40 years. You then gave it your all. And one thing that you want to definitely do is ensure the succession of the business, or make sure that the business is able to continue after you're gone or you retire, whatever the case may be, whether you leave it to your business partner if you have one, whether if you leave it to your kids, whatever the case may be, you can use life insurance to help ensure that legacy continues. Okay, so a lot of these are done with what's called buy-sell agreements. So the first type of buy-sell agreement is what's called a cross-purchase plan. And as you can see in this one, so basically what happens is let's just say there's two owners, there's owner A and owner B. And they'll enter into this cross-purchase plan where owner A will take out a policy on owner B will take out a policy on owner A. They list themselves as the beneficiaries, and then that way, let's just say owner A passes away. And now what will happen is owner B will get, I could be saying it's backwards towards the from the diagram on the screen, but owner A passes away. Owner B gets the death benefit. Owner A has left all his stake in the company, all his shares to his estate. And now what owner B can use that life insurance for now is to purchase those shares or the piece of the business that owner A had from owner A's estate.
Okay.
Okay. So owner B will basically take that life insurance and purchase owner A's shares from his estate. Okay.
Mhm.
So that's what's called a cross purchase plan.
Okay.
Okay. And then the last one is called a stock redemption plan. Okay. So in this one, basically the same thing. A company enters into an agreement with owner A as well as owner B. The company is making those premium payments to the insurance company. And then let's just say owner A passes away. He leaves his business affairs or his shares to his family or his estate. The company will then receive the death benefit from the insurance company. And now what they will do is use those funds to purchase the I'm not gonna say the controlling, but the business shares from owner A's estate.
Mhm.
So one is cross purchasing is, hey, I'm owner A, this is owner B, we're going to take them out on each other. And then we have stock redemption plans, which is that's pretty much the business is going to take out the policies, and then the business will purchase that the deceased owner's assets in the company or stock in the company. Okay.
Yeah.
So
Gotcha.
okay, so these are pretty much ways, like I said, that you can pretty much use life insurance. One, for your business. Two, for like I said, whether it's for yourself or for your business, you can use life insurance for many things. People don't even know that, people don't even know that life insurance has cash inside of it when done correctly. A lot of people think that, oh, I pass away, somebody else gets some money, that's all it is. But it's used for so much more than that. And what we definitely love to do is just, even through these seminars and definitely continue down the road, is educate people on the importance of life insurance, whether it's personal or used for business purposes.
Okay. Thank you.
That's pretty much it. So actually I can stop there. See if do y'all have any further questions as far as the life insurance piece goes?
Yeah,
No,
shoot.
no.
I don't know if I want life insurance for life insurance now, if I can use it for all my business purposes. I'm like, man, because did you say it gets 8 to 10% return?
Yes.
Is it what you?
I tell people all the time, I don't even you literally took the words out of my mouth. I don't sell life insurance for life insurance purposes. I sell life insurance now for the financial benefits that life insurance brings.
I mean, because in this message, just what you showed me tonight, it's like, okay, I could get the insurance, save up at least 50,000. Y'all can bury me with that. Then let me do the rest with my business. Just put that money over in the bank and use that for burial, as opposed to keep paying, yearly and monthly. And then go this route for my business, for family ventures, for
your personal. Yeah, you can.
Yes.
Even if I go down, so I mean, what time? What's the time looking like?
Oh, you good? Go ahead.
So I'll even get into a little bit of just like the personal.
Oh, I saw compound. Go back up compound.
So this I can talk about this slide. So basically, this talks about the power of compound interest and the rule of 72. So if you divide 72 by the interest rate being earned on your savings, you'll obtain the approximate number of years for your required for your initial savings to double. And the reason that compound interest is so attractive to people, and for people who actually understand it, people may think, oh, 1% isn't a lot, 2% isn't a lot. But when you use that for compound interest, the difference between 10 and 12% over 20 or 30 years can be the difference of $30,000-$40,000. And for those that don't know what compound interest is, you have interest. Let's just say my principal interest. If I have $100, I made 10% on it this year. I now have $110. And then the next year, if I'm only getting interest on my principal, I'm still, let's just say it does 20% the following year. I'm still only going to get 20% on that initial $1,000. But with compound interest, let's just say I have $1,000. In the first year, it makes 10%. I now have $1,100 inside my account. Now, in year two, when let's just say I do 20% again, instead of me only getting that 20% attributed to my principal, it's going to be compounded on the interest that I accrued last year. So now not my $1,000 is getting the interest. My $1,100 is going to get that interest.
Right.
That's where people start like, oh, my money making money.
Yes.
Okay, and that's pretty much what like I said, the power of compound interest, because every percent when it comes to compound interest can make a big difference.
Oh, yeah.
Okay.
I just didn't know insurances did it though. I just didn't know.
And I can even talk about, and I'll talk about real quick, I can just kind of talk about the difference in just personal insurance. I can probably shoot through this in a few minutes, but for when we switch to the personal side, there's basically two types of insurance. There's term insurance, and then there's, people like to say whole life, but it's term insurance, and then there's permanent insurance. Term insurance is insurance that's only going to cover you for a specific term. It could be 10 years, 20 years, 30 years. And then when that term expires, they will give you the option to renew, but when you renew, it's going to be at a much higher rate than you had it for the original 30 years. So if I'm 30, I get a policy that's $100 a month. I'm now 60 when it expires. I'm renewing it at the age 60, 61. The same policy that I was paying $100 for, I'm probably now going to be paying $600, $700 for.
Wow.
Okay.
But Jesse, tell me something. So if you have that policy and it expires and they tell you to renew, the money that was in this policy all the way up to when it expires, you lose it?
Great question. So the money that is used to pay premiums for a term policy, those premiums will be lost when a term policy expires.
Oh,
Term policies do not build cash value.
Oh, okay.
Okay, so that's step one. Now, I will say step two, insurance policies have what's called riders, okay? So with these riders, there is a such thing for a term policy called a return of premium rider. With this return of premium rider, if let's just say I get a policy for a 30-year term, I pay $30,000 into that policy over those 30 years. At the end of my policy, they'll have a return of premium rider. They will refund me that $30,000 that I used to pay that premium. But
the rider is something you have to put in effect when you get the policy.
Yeah, you pretty much put it into. I'm not going to say with 100% certainty that you can't add it after the policy starts. Yeah, I'm about to say something. Okay. But usually 9 times out of 10 they're done at the beginning. But depending on maybe who you go with, you probably can't add it at the end of the policy. After the policy is actually effective.
Oh, okay.
But I would say with the return of premium rider, it's going to shoot the premium of that policy up. So what I like to tell people, instead of getting a return of premium that's still really not going to build you cash value, at the end of 30 years, all you're going to do is get back the $30,000 that you put into it anyway. You might as well go ahead and get you a permanent policy, i.e. an IUL or a whole life policy that will have been returning you 5 to 10% every year over the next 30 years. So now instead, after that 30 years, instead of you getting $30,000, you're going to have a life insurance policy that's probably has $100,000 sitting inside of it.
Yeah, because of the interest. Yes, I understand that. Yeah.
Okay.
Thank you, Marcia. Good question.
Oh, you're very welcome.
So
don't want to lose
term policy. All right. And then so that's your term. Then we can move on. And I will say this, even though terms are not the more ideal of the policies, they definitely do serve their purpose. So they're like, I can eat mashed potatoes by themselves, but it's good maybe to have a little gravy on the side. term policies are that gravy on the side. So if I have a permanent policy, and then let's just say I can even use myself, you know, I'm getting married, me and my wife may purchase a house. If something happens to me, I don't want her to bear that financial burden of
Mhm.
being able to pay that mortgage. So since I already have my permanent policy in place, I will get a term policy because term policies are cheap, pennies on the dollar, and I will just get a policy that will cover the mortgage in the event of my death. Same thing if I have kids, you know, once I have kids, I would purchase a term insurance policy. That way, if something was to happen to me while the children are young, that life insurance policy would still be able to provide for them when I'm gone.
Okay.
Got you.
Okay, so like term policies, they definitely have their place. They're just not the steak and potatoes. They're the gravy on the side. Okay.
Yeah, and if you live too long, then you're in trouble.
Yeah, and that's the thing about term policy. I mean, at its basis, you're basically betting against yourself to live.
Mhm.
You're basically saying, I am going to die within the next 10, 20, 30 years when you get a term. Okay. And then next we have, like I said, we talked about permanent policy. So those are broken up into two types of policies. You have whole life policies, and then you also have universal life policies. So whole life policies, and you may have heard the term, you know, become your own bank or build your own bank, create your own bank. So basically what that does is, so if we look at this illustration right here, so then we have a policy holder, they pay premiums to the insurance company. And then basically when you pay those premiums are split into two buckets. One bucket is your life insurance, so you're purchasing life insurance with it. And then the second bucket is your cash value. Okay. And then that cash value every year with a whole life is usually a fixed interest rate. You're usually, so for insurance, full disclosure, you know, I have a whole life policy. I actually have both, but I have a whole life policy. With that whole life policy, it does not pay interest based on the market. What it pays is a dividend. Because when you purchase a whole life policy, you pretty much become a stakeholder with the insurance company that you have purchased the policy with. So they pay you a dividend. That dividend with most is on average usually around 5 to 6%, which is much higher than what you would get just sticking your money inside of Bank America. Sticking the money inside of Bank America, you're going to be getting less than 1%, probably around 0.004 points like that. With your life insurance policy, you're probably going to be averaging around 5% like clockwork. Okay. Then the same thing, you can use that money to buy a house, to buy a car, send your grant school, whatever you want to do. You can use that money however you see fit. Okay, so that's all.
Let's see, hold on, sorry. So what you're saying, the same way you're talking about, you can use the business profit however you see fit. If you are using it for business, it means you can use it anytime.
Anytime, as long as you have the funds inside the policy, you can use that money however you see fit, whenever you see fit.
Okay, gotcha.
Okay. All right, so that's a whole life policy. Then next we have a universal policy. So the universal policy that I like to use, so you have regular universal life, you have index universal life, and you also have variable universal life. The one that I like to dabble with mostly for 90% of the people that I work with is a index universal life. Okay. So if you can see this, and I can blow this up a little bit. Let me see here, play from current slide. So y'all make this a little bit bigger. Let's see. When it come up, hopefully I can see it.
Okay, yeah.
Okay. So
this
is a universal life policy. Okay, so as you can see, we're comparing this IUL to Roth plans, qualified plans such as IRAs, 401ks, things like that. So the first one you'll see is no stock market risk, right? So as I told you, IUL stands for Index Universal Life Insurance. So it's a life insurance policy that's attached to the index of a certain market. It can be the S&P 500. It can be the NASDAQ, it can be the global market, whatever market you choose to attach your policy to, okay? So no stock market risk. you'll see the IUL is checked, the other ones aren't. That's because IULs have what's called a floor. Okay, so that floor means that even if the market were to crash, last year we had a terrible market. I think it was like -17, -19%. If you had your money inside of a Roth plan or a 401k, a lot of people lost a lot of money last year inside of those different types of plans. If you had your money inside of a life insurance policy, the worst thing or what would have happened to your policy is your account would have been accredited 0. You can never lose money inside of your life insurance policy based on market performance because of this floor. Okay. Also, life insurance is included. That's kind of self-explanatory. It's a life insurance product. It's going to come with life insurance. Also, these different policies that I mentioned, the universal life, whole lives may have on some, terms have them as well. It's what's called accelerated living benefit. Well, living benefits. And basically there's 3 types of living benefits. You have one, terminal illness, which means that basically if, let's just say, God forbid, somebody's diagnosed with 12 months or less to live, they would pay that policy out early. Next one you have is critical illness. That's if, you're diagnosed with heart attack, stroke, liver failure, kidney disease, anything like that. It's like maybe 12 qualifying illnesses. They would pay you out that policy early. The last one is chronic illness. Chronic illness is if you can't perform certain day-to-day activities by yourself, if you can't bathe by yourself, feed yourself, go to the restroom by yourself, do certain day-to-day activities, they would pay you out the policy early. And what paying out the policy early looks like is, let's just say I have $100,000 policy. Most companies will pay between 70 to 90%. So let's just say 70%, I have $100,000 policy. They will cut me a tax-free check for $70,000, and then they will leave $30,000 inside the life insurance policy to be paid for burial and any other funeral expenses. Okay. So that's so that's living benefits. We talked about loans, how you can pretty much use, these policies for loans. Let's see, earnings accessible prior to age 59 and a half. If you have a Roth plan, 401k, things like that, you cannot touch that money before you're 59 and a half. If you're due, you're assessed a 10% penalty. With life insurance policies, like I said, as long as that money is in there, you can pretty much touch that money at any time. Okay.
So let me do something, Jesse. So, and maybe you answered this, but I just want to make sure. So therefore, you can put a lump sum in the insurance policy?
Yes, you can put lump sums. So insurance policy, so just like a Roth plan, right? So I know it was maybe $6,000 or $7,000 that you could put inside of a Roth IRA. I think they may have upped it now, but that's the maximum that you can put into a Roth IRA, or that's what's required to put into a Roth IRA. With life insurance, they have what's called a 7-pay. That 7-pay is the most that you can contribute to a policy throughout the year. So, and the bigger the policy, the bigger that 7-pay. So let's just say, you have a business, and you want to stick $20,000 inside of your policy a year, you would just make your policy big enough to be able to stuff as much cash or at least $20,000 inside of that policy.
Okay.
Okay. So yeah, you can stuff as much cash as you want to inside of a policy. It just depends on how you design it. But the bigger the policy, $100,000, $200,000, $300,000 death benefit, the more cash that you'll be able to stuff inside.
Okay.
Okay. Let's see. We talked about accessing earnings tax free. We talked about tax free benefit for heirs. We pretty much talked about a lot of stuff on the business side, because like I said, same way that you would use a life insurance policy for your personal, you can pretty much use them pretty much in the same ways for business purposes as well.
Okay. Gotcha.
Yeah, and that's like I said. So for tonight, that's pretty much. These are kind of illustrations. This is, let's just say somebody used this as their business policy. They contributed $6,000 a year into this policy over, 30 years. This person retires when they're 65, and they've accumulated, over $400,000 inside the policy. they can now start paying that individual, pretty much that pension of almost $40,000, pretty much until the age of 90.
No.
Wow.
So like I said, these are those golden handcuffs that we talk about and really keeping people, with your business.
Okay.
Okay. Yeah, even if they don't like it. I mean, I know plenty of people working now who literally only working to be able to get the benefits at that company, whether it's their health
Mhm.
insurance, whether if it's life insurance, because sadly, a lot of people don't have life insurance outside of their job. I'll talk to people and I'll be like, you have life insurance, and then the first thing they'll say is, yeah, I got something through my job. But what if you leave that job? What if
Right.
that job closes tomorrow? You want to definitely make sure that you have life insurance outside of the job that you are working with.
That should be
Yeah. Mhm.
It's gravy. Yeah, it's gravy. I didn't want to say it again, but yeah, it's gravy.
Yeah.
Wow. This was so informative, Jesse. Woo.
Yeah, I'm glad I can help out. I ain't stutter like water boy like
Thank you.
Yeah.
running battle
goodness.
scared me straight.
Right. I'm just like, I need to call all my kids. Listen, I got somebody
Some
I
of
need to
it I
get out
knew,
to.
but yeah.
So they can start now. I can kind of hit a threshold, but they can start and do it, to get it right.
Mhm.
Wow.
Yeah.
Yeah.
So that's what, like I said, so that's what we're going to continue to do. We're going to continue to, like I said, just educate on these various topics. I love teaching on this stuff. So, I love spreading knowledge, especially, even for the church,
Right.
probably even come up with, I don't know how many people in the church probably don't have insurance, but,
A lot.
Exactly.
you said, well,
Exactly.
we do.
I can gamble that it's a lot.
Yep.
Yeah.
Gotta get out them GoFundMes.
Yeah. I'm gonna start with a no GoFundMe campaign.
GoFundMe.
And life insurance is very cheap. I quoted somebody today. It was a 44-year-old male for $100,000 policy. He would pay, and this is at age 44. I think he would pay $88 a month.
Yeah.
He's
Yeah.
paying $8 on Friday night when we go get them.
Exactly.
That's a
For
cheap
one
dinner.
person,
Right. Yeah, that's dinner.
So yeah, I mean, it's a, you're talking about 20 or 30-year-olds. They're $100,000. They're paying $30 a month for $100,000 policy, and they're locked into that price for the rest of
Right.
For the rest of, yeah. For the rest,
they're
yeah.
locked into that price for the rest of their life, and it's going to accrue cash value.
Wow. So is this your company, C4?
Yes, ma'am. C4. So actually, let me go back up to.
Man, you want me to think about it, then just walk away from you.
Yeah. So
Okay.
the name of my company
Ooh.
is C4 Financial Group.
Okay.
So if you scan that QR code with your phone, it'll actually bring
Take it to the website.
my personal contact card, my virtual contact card.
Okay.
That's my website. That's my personal number. If you ever had any questions regarding insurance or anything, and another topic that probably they can be its own topic by itself is also annuities. A lot of I can talk about annuities at a later date and how they work. They're basically insurance contracts as well.
I didn't know anything about those. Okay.
Yeah, a lot of people find annuities attractive if they've already got like just a lump sum that they just want to stick somewhere. And annuities are those like epitomes of I just want to put money somewhere and I don't want to look at it no more for the next 7 years. That's what an annuity is. You make a lump sum payment and then you just kind of look away.
Okay. Wow.
Told y'all we better.
I actually,
This is
my sister does the insurance thing, some of the things you're talking about, Jesse. So I actually got that that policy that you just talked about with the death part to it and whatever.
Hold on, say that one more time.
You know that policy, my sister does the insurance thing too. So she actually talked me into getting that policy you talked about that has the death benefits to it.
Well,
that one,
are you talking about the IUL or the whole life?
I think it's the IUL. I think it's the IUL. I think.
Okay, yeah, the IUL. Yep.
Yeah. She did.
It's not going to expire on you, right? So you can make sure you don't have a term.
Yeah, no, it's not that term. No.
Okay, yeah, good. So yeah. So your sister did right by you.
Yeah, she did. She did. She did.
Yeah, yeah.
Because I don't have kids, so I'm like I have to make sure I can. If anything happens, I'm not a burden to somebody else.
Yeah, and
So,
and I mean, there's so many different because even when you talk about just if some people just want burial insurance, and that's those, so we call those final expense policies, where basically it's just enough to cover your burial, and those can be relatively inexpensive, especially for older people. Look, what was it? Was older people? I'm talking about 70s, something like that. They can still get coverage for maybe $100 a month to at least cover their expenses for when they're gone. So
yeah.
yeah, so there's all kinds of policies. Like I said, it just depends on somebody's it just depends on somebody's specific needs. Like I said, even when I talked about IUL, they also have VUL, so it's variable universal lives, meaning that but the only people who really get variable universal lives, to be honest with you, are people who just don't respect money. They just like I'm this money at it. It can because IULs have caps, so your cap might be 10%, 15%. Variable universal lives, they don't have caps on them. So, but they also don't have a floor. So where the IUL has that floor that'll protect you at 0%, the VULs don't, but they also have a lot more upside than most IULs. However, the good thing about being a broker is I get to work with a lot of different companies. And some of the companies that I have come across now have uncapped IULs, and they are participating at like 180%.
Okay.
Mm.
Yeah.
Wow.
So now I don't even really need to offer a VUL anymore because I can offer you the IUL. That's still gonna have.
So, Mr. Jesse, are you going to share your PowerPoint presentation with us?
I can. So what I will do, I'll finalize it. I'll clean it up because really, I ain't gonna lie. I threw this together probably 2 hours ago. So
you did a good job.
Yeah.
It wasn't pretty. It was straight to the point. I liked it.
Yes, it was straightforward. Just
Straight,
like to go back and look on things one more time just to make sure I get it clear in my head.
Okay, yeah, no problem. I'll clean, like I said, I'll clean this up for you, and then I'll make sure that when we send it out, either tomorrow or
I guess that the teacher whenever you get it done, it's fine.
Yeah.
No rush.
Yeah.
Okay.
No rush. Whenever you can get it done. Fine.
I'll probably listen to this recording again also.
Okay. Awesome. Well, like I said, I definitely hope I talked to you.
Gentlemen.
Hopefully I made Ronnie Battle proud.
Yes, you did. Yes, you did. Yes, you did. Good job.
Just 2 of us.
I know, right?
Good job.
Awesome. Well, next week, what did you want to come?
I think we're gonna do a recap next week.
Yeah, the rest is the last.
Yeah, I'll be there next week. I just wasn't feeling. I was feeling a little bit under the weather today, and I'm like, I don't think I can drive.
That's the same way I felt.
Yeah.
Overworked today.
Yeah.
For marketing plan.
But I'll definitely be there next week. Because next week is the last week, right?
Yeah, so next is just so next week will be our final week of this summer series. Like I said, we will still continue education classes. But for the summer series, next week will be our final week. We're just gonna do a lot of recapping, answering questions, and there'll also probably be a little new material as well. But but next week will be our last week, and then we will progress into fall, like I said, fall series, where we also will be looking forward to our business seminar that we're looking to do in September, where basically we'll be introducing the businesses that we have inside the church to the congregation. So we had thought about doing it in August, but we know a lot of people will maybe be returning from vacation and different things in August, and school getting started with their kids. So we're looking at doing the business fair in September.
Yes, sir. Sounds good.
Okay.
You ladies got any more questions?
Yeah. Mr. Battle, I'll reach out to you.
All right.
And thank you for keeping me accountable.
That's why, look, now you need now to get another accountability partner, so when you can't reach me, you got them.
Yes, I'll find another one. Yes, sir. I will.
All right. we can do
All
that.
right. Well, y'all have
All
a
right, good night.
tonight. Like I said, I enjoyed talking to y'all tonight. Like I said, hopefully I taught y'all something. I definitely look forward to speaking with y'all a little bit later.
All
Yeah,
right,
you
sounds
sure did. Yes,
good.
thank you so much.
All right.
Thank you. Be safe.
All right, good night.
Good
Yeah, good
night.
night. Bye-bye.
Good job, man. Partner.
Yeah, man, that was good information.
Appreciate
Every time I can learn something, good job.
it.
I can learn something.